All right, and welcome back for another episode of Carnivore Trades. Today is Thursday, August 11th, 2022. So market's gapping up here today and basically back to the flat line. So giving back all the gains here. I know a lot of people are looking for a top, calling a top. It's possible, I'll put it that way. Obviously we're looking for one here at some point. We were bullish here for the summer rally, and now we're just getting way too overbought and extended. That doesn't mean they can't float this market up a little bit higher. That's always a possibility, but a nice reversal here. I mean, let's face it, the market is just way overbought here in the short term, just gapping up day after day pretty much, despite this minor little consolidation here. And so markets were due to pull back regardless. But again, I keep stressing this. I know it's like a broken record here, but the volume's not confirming this. So we need to see heavy volume come in. Otherwise, they can just float this market back up. And you could say that this is just kind of a routine pullback, really, all things considered, especially when you consider the Russell 2000 still positive. We have the NASDAQ 100 kind of lagging today. So usually that's more of a bear indicator when the NASDAQ is weak. But when the Russell is leading, that kind of cancels it out, right? Because Russell's a risk on. So we got to respect this market right now. We got to respect the light volume, but that doesn't mean we can't follow through tomorrow with heavy volume to the downside. That we can't rule that out. We did go into basically a 50% fib here today. If we draw that in here on the spiders, so we went right into that 50% fib. Really kind of went into it yesterday. And then, we came up here and filled this gap window, just got shy of 325. But, market obviously reacting. We talked about this. There's a lot of resistance in here. And, even though you did kind of chop around a little bit, you didn't do enough to get through all of this. So markets needed to pull back here. And then, again, even if we do have another leg up, I've been saying the upside is probably limited. There's a ton of resistance up here. This downsloping trend line, 200 moving average. There's a 618 right up there. You got the red bar here, the breakdown. So there's a lot of supply up there as well. And, this market really hasn't had any sort of pullback. So, we're getting long in the tooth. And I think the market is on borrowed time here. Triple Qs, obviously the same kind of thing, filled this gap here from May 4th. So that gap is now filled. And a lot of the time when you have this trend, like these types of trend lines here, a lot of the time that third hit or so will usually be kind of a fake out. So that could be something that's on our hands here. We do have OPEX next week, so that could be a turning point for the market. We'll see what happens here. We do have there's also a huge gap here on the Qs to get filled, but anyway, you slice it or dice it, a nice sell day here. But until we get the volume come back and we see follow through, there's really nothing saying that this is anything more than a pullback. However, I still think this rally itself is on borrowed time. And I explained this a little bit yesterday, but take a look at bond yields here. Actually, let's flip over to TradingView because I can show you the spreads. So here's this is the 2-year. Everybody should be watching the 2-year right now. Nobody's really talking about this right now. All they're talking about is how bottoms in and the market's going to all-time highs tomorrow. But take a look at the 2 and 10. It's still very inverted. Now, yeah, it did steepen out a little bit the last 2 days, but this isn't, this is still holding trend. And it's not like this is, it's not like it's sold off majorly. We're still inverted pretty heavily. The 3 and 10 is still in a very strong uptrend. The 10 and 30 did kind of back off a little bit here, but this is still holding up well. And if we look at the 2-year itself, what kind of pattern is this, guys? This is bullish consolidation. Nice up move, and you actually got to pop off that 20-week moving average there. So the 2-year is still in really good shape. The 2-year yield, that is. Why am I bringing all this up? Because the bond yields right now are telling us that this rally is not real. That doesn't mean it can't go a little bit higher. Doesn't mean it can't go on for a little longer, but the yields are telling us that the Fed is not going to be able to bail us out. So that is essentially the case, and that's kind of the thesis that I've made to you guys, over the last couple of weeks and months. But in any case, we'll take it one day at a time, and we got to see follow through to the downside if there is any sort of confirmed top. We did have kind of a, I was telling the members this earlier today, you don't necessarily have to have high volume on the exact peak But the follow through to the downside, you want to see that volume pick up. That's where the sellers, because the sellers need that liquidity. Buyers don't necessarily need liquidity. The algos and retail can just float the market up, which doesn't take a lot of volume, but sellers need that liquidity. So you need to see that volume pick up. And when that happens, I think we'll get a pretty good drop in this market. Anyways, Russell 2000 here basically went up to that 200-day moving average. Basically just got shy of it, kissed it. You also went into this red bar in this kind of area here. This was a bear flag previously. And, you know, a lot of supply stuck in there. So anybody who was buying here was a bag holder. They're turning into sellers now, so that's why you're seeing that IWM come in. And again, look how extended it was going into that 200 there. If it had gotten through that 200 moving average, I probably would have picked up some more. I do actually own a little bit of TWM right now, but I probably would have picked up some more if we could have pierced it. Didn't quite get there, but this should pull back. And again, you've got, look at this gap, you know, this thing's gapping up, already extended. Usually when things get exhausted, that's what they start to do. So this should come in shortly. Your downside target, first one would be right around this 190, 191 area. And then, you know, that obvious area right around that 100 moving average. There's a pretty good level right there on the Russell. The diamond here also pulling back, but still green. So, you know, no real issues, but it, you know, again, went up into that basically gap window area there from May 5th and getting a nice reaction off of that. Let's take a look here. Semiconductors, again, coming in sharply. These are down just 17 cents here on the day. You've got about a half an hour left in the session, but they had a nice pop early. If we look on the intraday, huge pop in the morning, and just kind of a pump and dump day for the semis, fading pretty sharply off the highs there. And that kind of led tech to the downside. Also down pretty sharply today is Tesla. That one took a pretty good beating. That is down, that was about 2.6%. When you consider where it started, that gap up completely faded there. So still hasn't made new lows, so it's still holding up, but definitely a notable laggard in the tech space. IGV here, also another laggard. So take a look at the daily. We still got a half hour left, but that's an engulfing reversal right now on IGV. We'll see if they save it. It is upticking just a little bit here in the last 10 minutes or so. But again, look at the volume here. There's no, you know, it's not like there's a plethora of institutional sellers pushing this down. So that's kind of the only caveat here. But you do have that big wide gap right there. It's a big fat gap, and it's about, we're still about 8 to 10 points away from where we are. So if that fills, that would give you some significant downside there in the short term on IGV, but, you know, potentially an engulfing reversal there. So definitely got to respect that. Biotech, XBI, gapped up and reversed just like everything else. So that is an engulfing reversal there on biotech. So that may have some downside here in the cards. Just maybe a little bit of cracks showing in the armor in some of these areas here, specifically tech. Well, again, we'll have to take it one day at a time. And, you know, again, not a huge, you know, a little bit of an uptick in volume, but it's nothing crazy. So you got to watch for that. Those, you know, market participants, once they come back, that's when this market will start to turn down. But Dow Transport, so that got up to, you know, I was saying the max move would be that 200 moving average, 15.1, 15.2. High of the day was 15.289. So pierced through it a little bit. Again, went up into that 5.5 candle from May 5th. And now you do have a potential little topping tail there on the transports. You know, stalled out at the 200 moving average again, just overbought like everything else. So having to pull back there. We talked a little bit about rates, but the 10-year, take a look at this bullish pattern here. Nice bullish inside bar and a continuation of that. So yields do look poised to move higher. 30-year here as well, blast off move there for the 30-year treasury. Now back above all four major moving averages on the daily. And again, like, this is not good for the bottom is in narrative. We had a failed head and shoulders pattern here on the 30-year and on the 10-year, and failed patterns usually lead to violent moves in the opposite direction. So we'll see what we get here in yields, but I think they're going higher right now. HYG, take a look at this gap and crap. That's a massive engulfing reversal there on high yield debt. You know, he just went up into, you know, another kind of supply zone right there, got overbought, and pretty sharp reversal. So another kind of best friend of the bulls would be this high yield debt market, right? We want to see high yield debt. You want to see mortgage-backed securities. You want to see junk bonds, stuff like that start to bid, because that's going to say that the market's pricing in the Fed coming to the rescue. If HYG is crapping out, then that's really contradictory to any sort of stock market rally. So keep that on your radar. Another thing you want to keep, you guys keep on your radar, I haven't talked a little bit about in a while, is the VIX. So over the last, really the whole year, everybody's been like, why is the VIX not, during that big sell-off we had, April to June, everyone was like, why is the VIX only up a little bit here, and a little bit there, when the market's down 2.5% a day? A lot of that has to do with the hedging that was going on. Everyone was already so hedged because the Fed had really telegraphed what they were doing. It wasn't like 2020 where it was a black swan and it was just kind of run for the exit. Everybody's running to get hedges all at once. People had time to prepare, and they were able to kind of hold those hedges and roll them out to the next month and so on. Now the VIX is starting to function properly again. And the fact that we cracked that 20 handle yesterday has me interested. So if we start to continue to, and by the way, there's a lot of support here, green bar, reversal bar, 1, 2 right there. If the market does start to float back up, especially in OPEX week, and the VIX does not make new lows, that's your signal that there's problems right around the corner. So we'll be watching the VIX every single day here, also watching the 2-year, like I mentioned before. But yeah, I just wanted to throw that little extra bit in there. Home builders here, XHB. Strong sector today, believe it or not, even with yields up. So, they managed to hold up here. We'll give them credit where credit is due. And that's, another thing. This wasn't really, it was a good reversal, but it wasn't a broad-based reversal today. So we have the S&P fractionally lower right now, but we have fins are up, energy's up, home builders are up. So we're not necessarily convinced of anything just yet, but it still did close, or is about to close, back below this little trend line. So came off the highs like everything else there. ITB, same exact thing. Filled that gap today finally. And you did pull back in off of that. So again, there may be a little bit more upside in home builders, but I don't think it's very much. VNQ with an engulfing reversal here as well. So again, gapping, lots of gaps being left on this one too. So definitely make note of that. There's some back end filling to be done on these for sure. We talked about financials being up. Huge day for XLF. What can you say? And this is what happens when you get that light volume. So this has gotten above, kind of my upside projections. We talked about XBD. Broker dealers, this is still holding up really well. I didn't think this would even really get through 423, but when you get in these environments, sometimes the market can squeeze, higher than people think, and that's just the nature of it, especially in the summertime in August. This is generally what happens. So, but again, XLF, gap, starting to fade a little bit. This looks kind of tired here. You're into a resistance zone, so got to be careful with these financials right now. Crude here, nice bounce back, but kind of stalling out at that 20/200 moving average necktie right there. So it did pull back just a little bit off the highs. Again, still looking for one more leg down here in crude. I think we're going to get it too. I think we got one more little stair to step down, I guess. And we did kind of back off of that. So that does suggest that this area is now resistance. So we'll see what we get here. But crude did get a little bit of a bounce, so give it the benefit of the doubt for the short term, but I'm still expecting another push here. XLE, strong sector today. Got above that red bar high, and now you have a potential daily chart higher low here. So XLE holding up pretty well, but we got to look at the weekly here. So you still have, you still got to get above that 20-week moving average, and I would say at least above this green bar. And there's still a lot of supply up here, but technically the chart does look a lot better now. I would still prefer another leg down, and I still think we can get one, but XLE did have a nice day today. Same thing with XOP. That actually did make a new daily chart higher high, so that's showing a little bit of strength, and OIH showing some strength as well, but did stall out at that 200 moving average. You can also make a case, actually, just looking at this now, you almost have, you do have an inverse right there. So we'll watch that tomorrow. If you get a Friday close above this level, that would trigger an inverse on OIH. So we'll definitely watch that tomorrow. I don't know if it will. That's a pretty good little resistance zone with that 50 and 200, and you got a pretty good gap there. But we'll see what we get tomorrow. If we can get a gap and go, OIH could be off to the upside. So definitely pay attention to that one. Nat Gas also with a huge bid here. So just remains strong. Probably will have a little trouble with $9. As you can see, it pulled back pretty sharply off that, but what can you say? It's holding up. You got to respect it for now. Dollar index, managed to kind of pause here. We did kind of break a trend line yesterday. We'll see if we get confirmation of that with either a Friday close or any sort of close below this low here would kind of confirm that. But if it rallies back up tomorrow, it could kind of negate it. So dollar index, we'll watch that tomorrow for the Friday week close. And then gold here, pulling back a little bit today. You can see the GLD got a bid and then rolled over and then kind of just went sideways. On the daily, nothing really wrong here. Again, I said yesterday, we're going to kind of look for some consolidation to get above this red bar. And if we do that, we can make a nice push here on gold. So I like the pattern on gold. I like GDX as well. You did pull back a little bit more today, but again, it's still in this upper range. And if it does some more sideways action, we can get another leg up in GDX. Silver also now starting to potentially put in a little bullish inside bar. So we'll watch that as well. I like what silver's doing here. We'll see if we can get a little bit more consolidation, and then it can have a good leg up. So I do like the metals right now. Platinum, also a powerhouse again, all the way up to the 200 moving average. I wish I had held my PPLT, which I had a few weeks ago. I thought we would get more of a pullback off that 50 moving average, but sometimes it just blasts through it. I guess I should have just trusted that a little bit more, but in any case, it was a nice gain regardless. But platinum all the way up to that 200. Now you're coming into some sell, kind of sell bars here, so that's probably going to stall out there. But platinum remains strong, nice move off the lows, and then palladium also making new local highs as well today, so nice pop there. And copper getting up to that 50 moving average. So I've been telling you guys for a while, it's probably going to want to get to that 370, 375 area. We are there now. Tomorrow, we'll probably touch that 50 moving average, and I imagine you get a little bit of a reaction off of that, if nothing else than just some type of a pullback. But nice little reflex bounce here for copper, and finally nice to see it get off the lows there. All right, so flipping over here to Bitcoin. So Bitcoin is fractionally higher here today. Did pull back off the highs, kind of like the equity markets did. Ether, again, continues to be stronger. This is up 2%. High of the day was 1943, so getting close to that 2,000 target. And I told you guys a while ago, after I saw this consolidation pattern and pop here, I was like, yeah, this can get up to 2,000. So we're almost, to satisfying that target. We might even get a little bit of a pierce of it, if we push through it. But yeah, it's holding up okay, and nothing was really ever wrong with these charts. Nothing was ever broken on the Bitcoin chart or the Ether chart, really. It was just, from my perspective, if I was long or wanted to be long, I would be wondering why they are underperforming the equity markets, and that would have me concerned as a long. But in any case, here we got up to 24.9, almost 25,000. So maybe Bitcoin can have one more push up to that 26.5 area that I was talking about, if the market does hold up. But for right now, coin's still a little underperforming, and it's tough. There's a lot of negative news right now, and investors are, honestly, quite frankly, not too hot on owning these because of the current environment. But anyways, let's take a look back in on the spiders here. It's about 345, so market's setting up to close here. Yeah, we're basically just fractionally lower on the spiders. Looks like the Russell's just above the flat line. Same thing with the Dow, and the Nasdaq is comfortably in the red. So looks like we'll get those. Looks like the IGV and all those other ones will stay engulfing here into the close. But again, we'll need to see follow through before we start talking about any sort of top or anything like that. And obviously we need to see that volume come back. Anyways, guys, going to wrap it up here. Come find me on carnivoretrades.com, and I'll talk to you all tomorrow.